Hi, in this video, let me introduce the A7 technical indicator. The A7 technical indicator is a price-based tool consisting of 5 curves. 3 blue curves make up the blue A7, which includes a lower, middle, and upper curve. Additionally, 2 red curves form the red A7, which is designed for shorter-term analysis. Why the name A7? This indicator resembles a highway when prices soar, or rather, when they take the highway. The A7 is the name of the Autoroute du Soleil, Highway of the Sun, which connects northern France to the sunny south. That's how this name was chosen for this technical indicator. The red A7 stays very close to the price action. It can act as support or resistance during trends and can also serve as a stop-loss level. In addition, the indicator includes crosses on TradingView or circles on Pro Real-Time, and buy-sell arrows. The arrows indicate potential buy and sell points. Black crosses below the prices represent potential bottoms, while red crosses above the prices signal potential tops. The A7 acts as a channel, support, or resistance. The A7 technical indicator serves as a channel and a support for prices. In a strong uptrend, prices tend to stay above the red A7, which itself remains above the blue A7. During this phase, both the red A7 and blue A7 are bullish, forming an inclined support. If prices break below both A7 curves, this signals the potential end of the bullish swing and, eventually, a trend reversal. Conversely, in a strong downtrend, prices stay below the red A7, which itself remains below the blue A7. In this scenario, both A7 curves are bearish, acting as an inclined resistance. If prices break above this resistance, it may indicate the end of the bearish trend and the start of a reversal. When prices are not trending, they remain within a channel formed by the blue A7. In weaker trends, the A7 moves upward or downward depending on the direction of the trend, but prices still stay within the channel defined by the blue A7. Sharp corrections and trend reversals. During sharp corrections, these movements conclude with a reversal that begins when prices stop moving above or below both A7 curves. For example, if prices have stayed below the A7 for an extended period, a move to the other side of the A7 signals a potential trend reversal. In fact, during a trend reversal, prices always cross both the red A7 and the blue A7. Stop loss with the A7. In a long position, it can be advantageous to place a stop loss just below the lower line of the red A7. Since the red A7 is close to the price, this allows for a tight stop loss, minimizing potential losses during an ongoing bullish swing. Conversely, in a bearish swing, a stop loss can be placed above the upper line of the red A7. How to trade with the A7 technical indicator. When a bullish or bearish trend undergoes a significant correction, prices move to the opposite side of the A7. The end, or the beginning of the correction, is marked by the return of prices to the other side of the A7. This can be used as an entry opportunity. In an established trend, a position can be entered when prices correct slightly and approach the red A7. The entry occurs when prices move away from the red A7 again. If prices fall below the red A7 but remain above the blue A7 and then move back above the red A7, this is also a buy signal. The DAS indicator can also be used to confirm the setup. Conversely, a movement ends when prices re-enter the A7 and then cross it. The stop loss can be placed below the red A7 or above for a short position. For a wider stop loss, the lower side of the blue A7 or the upper side for a short position can be used. Where to get the A7 indicator? The A7 technical indicator is available for Pro Real-Time and TradingView. See the links in the description. It is also recommended to use it alongside the FTA Bowl and DAS indicators. Thank you for watching.